Hi, guys, and welcome to the 37th episode of the weekly trading wrap up, where we talk about the weekend markets from a trader's perspective, what to focus on, and what to ignore. So, as usual, let's talk about it. Let's talk about what happened. I'm recording this on Friday. This is Friday. As usual, we start with the market, the SPY. The arrow here denotes Monday, Tuesday, Wednesday, Thursday, bearish engulfing, and then Friday, the big non-farm payrolls report came out that crushed this market. Okay. So before we begin, we always talk about the technical picture. And what does the technical picture look like? Well, despite Friday's gap down massacre, if you will, Bloody Friday, this is still bullish. Still a very bullish picture. Let's look at the moving averages. Still above the 50, which is the red. Upward sloping 200. It was rare for this market to stay so far above the 50. Well, now we got our wish. It's coming back down. So we have the moving averages still bullish. We have, although the slow move higher was broken today, we're still bullish because we're trading above the highs of 613. And well, it looks like I'm going to get my wish. I was wishing like all week, like hopefully mentioning it on Twitter that hopefully we retest the 613 breakout point. It looks like we might do it. Maybe next week, who knows? But if you look at this picture just from a technical perspective, although Friday is bad, it's still a bullish setup. So don't forget that. Okay. Keep that in mind. So let's go to the sentiment indicators, because we always look at sentiment as well as the technical picture. And the fear and greed index all the way to neutral. It was at extreme greed for a while, was hovering at greed maybe midweek, and then this is a big drop. Big drop. I don't know why it has market momentum is at fear. I don't get that. It's not even close to fear, because we still have some greed movements here. Put call options, maybe they spiked this sentiment. They spiked the sentiment, meaning that they dropped it down to neutral. Okay, and I shouldn't say spike the sentiment. That's not a good thing. It's more likely that it dropped it much faster down to neutral. Okay, what's the opposite of a spike? A rug pull. Okay, we'll go with that. Slippery slide. Okay, it slid it all the way back down to neutral. Whereas usually a move like this on the SPY, which is just down 1.6%, I know we finally got that minus 1% day. It's not, the sentiment dropped quickly from greed to neutral. Okay? Just a 1.6% drop. That's good. That's good if you're bullish, because it still says that people are still a bit antsy on this bull market. Okay, what does the AAII investor sentiment say on Thursday? 40% bullish. We don't have that huge of a bullish move, and only 33% bearish, which is basically neutral. So we haven't even gotten into really extreme bullish sentiment yet. Okay, not enough to really sucker everybody in. So this is why, if you look at this neutral sentiment and the fact that we're not that bullish and still average bearish, this bodes well for the bulls. Okay, because if it goes down to 613, this thing might go into the fear and whatever. I'm going to start buying some stuff here if it happens. If it goes there and everything stays as is, all things being equal, I'm looking to buy the retest here. I don't know what happens after. Like, will it bounce and form a lower high before going lower? Will it break into new highs? We don't know. Okay. But as of right now, given the sentiment and the technical setup as bullish, so far it's a pretty good, healthy move for this drop to happen for the bulls. Okay, so that's what we get from this sentiment analysis. Well, according to me, that's my opinion. Okay, so now let's move over into the macro section. We had initial claims on Thursday, 218, still very low. They're not going that high. Okay, we shouldn't dwell that much into it because that's still pretty good. We had core PCE come in at 0.3%. They're expecting 0.3%. That's okay. Inflation is staying relatively sticky at these levels. Okay, so we had inflation in that, but we had inflation initial claims, but the big move, the untold story, is non-farm payrolls. Okay, this is from Zero Hedge, the untold story in today's jobs report. Basically, they're breaking it down into its components. First of all, the figure that we got was 73K, and they're expecting 147. Okay, so that's a big drop, big miss. However, usually when there's a big miss like that, the market won't react that badly, and people will think there's a slightly higher chance of rate cuts, so it'll be positive for the market. However, the other thing is that there were massive downward revisions in the past 2 months in May and June. Okay, that cost nearly 260,000 jobs. Okay, so here in June it went from 125K to like only 19K of jobs created, and in May it was like only 14K of jobs were created instead of 147K. So literally 260,000 jobs disappeared in the revision. So what happened? Was it the birth deaths? Well, you'll see here that if you keep reading, it's mostly like maybe undocumented workers took a hit. Okay. The big move, though, is that here, if you see, since the COVID crash, there hasn't been that kind of a drop in jobs as we've seen this past 2 weeks. Okay, and you can see that native-born, they split it versus native-born and foreign-born workers. And you can see that the foreign-born workers made up almost all of the job creation since October 2019, and the native-born workers have lost. Okay, this is like 3 million foreign-born workers got jobs since 2019, with a loss of 1.3 million for the native-born. Although if you look at it in absolute terms, more native-born people have jobs than foreign-born people, but it's the change that is mattering. So maybe the fact that people are getting deported is hurting the foreign-born workers, and that's why we had such a big drop. I don't know. You're going to have to read it more to figure out what's going on, but it's the combination of 73K in jobs created last month and a revision of 260,000 jobs in June and May that really caused SPY to gap down. Okay, because we were sort of holding the highs. We saw it's incredible how the narrative can shift so quickly, and this is why you should have short exposure. Okay, which we were having short exposure, and I added a little bit more going up. But you can add short exposure without it costing you a lot of money. You can structure an options strategy in such a way that you get paid while still maintaining a short exposure and having your underlying long. So as you know, since around here I lightened up on my longs and was adding short exposure throughout the whole climb here, and now here I covered a little bit of my shorts, and one of the shorts that was going to expire in August. I have a short exposure going out into September and October. I added as we were going up. So yes, I'm covered here. In fact, this is why we do this, because even as the market tanked, still made money. Okay, so no matter what happens, you want to still make money. Okay, on the way up I was making money, but not as much as I would have liked to, and not as much as somebody who was full-blown, all-out long, max long. But here, these longs got smoked, and I still made money. So the point is to construct your portfolio of ideas in such a way that you're covered and you make money either way, especially during the summertime. You don't want to take massive bets during the summer. Okay, you want to be able to sleep and relax. Okay, so yes, this is why we add short exposure, to take advantage of these cases. Okay, and we are not at the point yet where I want to add, because we're still at neutral sentiment and we haven't really, I think, tested the lows. Who knows? We're close. I mean, I like the fact that sentiment dropped a lot with just a 1.6% drop in the SPY. Maybe we need another 1.6% to get it at the highs and maybe below, maybe touch it here, undercut a bit before going up. Who knows? I'll have to see at the time. But right now you should be, taking some profits off of your shorts, holding your shorts for a bigger move, and creating a list of stocks that you want to buy when the market gets into like more of extreme oversold conditions. Okay, that's what you should be doing right now. Making a list of what stocks to buy now. I am, because I lightened up a lot, so I'm looking for stocks to buy on the dip. All else being equal, if the drop comes massively and people really start getting scared over the weekend, like they go over the weekend, they read the reports, and then the massive selling continues, then you're happy that you're light on the long side. But as of right now, make a list of what stocks you want to buy and get ready to buy them soon, maybe next week. Who knows? Okay, and you can see this drop is on big volume here. Okay, whereas the climb was on average volume. So now the big volume is happening, coming down. This is the opportunity to start adding back some longs if it happens. Okay, not yet. I haven't yet. Okay, so I'm just waiting on that move. Okay, so what else did we have in terms of the PCE component? Not the PCE, sorry, the jobs report. Well, as this jobs report happened with the revisions, you can see the revisions in interest rate expectations. Okay, so we're going to the Fedwatch tool, and we're looking at interest rates expectations going into, this is of December 2025. So in all of 2025, look what a big difference it made. We were at around 2 and 1. It was like the histogram was around like this, if you can see a little mound here, but now it's 3 cuts, 54% for 3 cuts. Okay, and you can see like as early as October, 65%, the September meeting, 85% chance they're going to cut in September. This is what this big drop in NFPs and the revisions has done to market expectations. This was not this big before. So basically, a cut every meeting for the next 3 meetings of 2025 is what market participants are pricing in, okay, after this big drop. So this is significant. This is a big move. Okay, you can see that rates, even in the US 10-year, the long bond, which we always look at, huge drop. Okay, drop of 3.7% in one day. It's still staying high. Okay, but this, if we see it continue to go down, that's a very bad sign. Okay, bad sign. Like lowering rates is not a good sign, because the Fed lowers rates when there's trouble, not when things are good. Okay, when things are good, the Powell was talking very hawkish, like he's going to keep rates high. And remember what we were saying before. If you look at my Twitter, you'll see. And I said the Fed will not cut unless the market drops a significant amount. To me, this is not very significant. But if it drops a significant amount, or if inflation comes in month over month with negative prints. So inflation really has to come down before the Fed cuts, or the market has to come down. Otherwise, I don't think the Fed would cut. So now we're getting the conditions where the market is coming down, so maybe the Fed will cut. I don't know if they'll cut 3 times, but we'll see. We don't know. Things could rebound again, okay? Which is, I suspect that might be the case, because people are getting really, really scared on this move, okay? So that's the interest rate moves. So what else interested me? Okay. Let's go back to the metals, okay? I always like to talk about the metals. What happened to gold during this whole time? Gold almost looked like it was going to break down. Break out into new highs a couple of weeks ago. But then, look at that. Quadruple top at around the $3,435 an ounce level, okay? It was going down, but as this market dropped, gold was going down, but still hovering at highs. It wasn't getting destroyed as the market was risk on, which was telling you something, Even on a risk on environment, gold held its ground, okay? So, but on Friday, you saw this Friday spike because, now it's risk off, I guess. So gold's still holding these levels, and you should always have gold in your portfolio, okay, as a hedge or as a multiplying effect. Studies have shown, I'm going to say it again, if you hold 20% gold and 80% equities, it'll outperform a portfolio that is 100% equities over time, okay? So you should have that in your portfolio regardless. So gold performed very well during this down move and is maintaining highs. What about silver? we should expect silver to be more reactionary on the downside and the upside. So silver here really didn't react. However, it's still bullish. Okay, we still have a bullish setup. It didn't break down. It's still above the recent breakout of 35 bucks an ounce. Okay, so still positive on that. What is the big differentiator in our three metals is copper. Okay, copper got destroyed this week. Okay, it's because like the news came out that what was it? The tariffs. They were front running the tariffs, and now I guess they did all of their buying, and now boom, back down into this level. So from 570, what was the price? Almost $6, 596 down to 444. What is it, $1.50 per pound? That's a big move. Okay, still over $4. If you look at historically speaking, $4 is a big price in copper, and it should do well if it stays around this level. I mean, copper companies should do well. Okay, but this is the big thing. Thank God I sold into the spike because I had some calls on CPER, which is the ETF. Okay, I sold around these levels. Okay, I had the 30 calls, and I sold around 34 average price, 34 a little bit higher. But I got out because it was going to expire. When it spiked here, it was going to expire in July. So in the third Friday of July, so I almost had to get out because it was getting close to expiration. So I got a bit lucky on that. But in terms of the copper companies that I'm holding, I'm still holding. Okay, I still have some long-term copper holdings that I want to buy, but I want to hold. But in terms of copper itself, like that is now, especially if there's a recession happening, copper's going to get hit. But as of right now, out of it. Not yet buying it. We'll wait till if it consolidates for another upward move, because it still hasn't really violated these levels. It's just back within this area, the zone that we had before. Okay, because these were like, abnormal type of front-running moves in front of Trump's 50% tariff. However, I still think the long-term picture for copper is bullish, because by the year 2030, we're going to have a serious problem when it comes to inventories. Okay, we need to find more mines and mine more copper in the next 5 to 10 years. Okay, so long-term, it's a very good play. But right now, it's going to take a hit. Better to concentrate on gold and silver. Okay, in that order: gold, silver, and then copper now is out of our radar screen. Okay, we're just waiting and looking. So that's with the metals. The other thing I wanted to mention is Bitcoin. Okay, Bitcoin was consolidating up here. News came out that a big giant whale unloaded billions of Bitcoin, 5, 6, 7 billion worth of Bitcoin. You can see the spikes here. I don't know if it's here, but I don't know who he sold it to. Maybe to an ETF, maybe to Goldman Sachs, who knows. But a big whale sold this Bitcoin around these levels, around them between the 116 to 120 level. Bitcoin that was held since 2010. I think over 10 wallets, one guy sold billions. Okay, maybe you know something, who knows. But as you know, I've been talking about Bitcoin and Bitcoin-related companies like, MicroStrategy. As you can see, it went down. And Coinbase, that took a big hit. But as you can see, they were benefiting, although going down as Bitcoin was going sideways, consolidating, Coinbase was dropping. Okay, so you have Bitcoin going down with the market. Okay, it's not a risk off asset as people think. I think it's a risk on asset. Okay, so it's not a hedge against the falling market. You're going to get killed if you buy Bitcoin and the market goes down. Although gold, it'll hold your gains. Okay, until a liquidating event happens. But that's we're talking ahead of ourselves right now. Right now, Bitcoin is going down. I'm out of it, looking to enter. I don't know if I'll enter around here. Okay, I'll have to see. As you know, we got lucky. We entered right here, literally, and 2-3 days later, we had the spike. Okay, we re-entered here, and now we were out. Okay, we got out here. We didn't get out here. We got out here. So we're waiting. Okay, and if you look at the strategy, Coinbase, if you look at the stocks, Coinbase destroyed. Okay, and why? Because earnings bad. Okay, it didn't beat It also has a big Bitcoin stash in it. It started accumulating Bitcoin, so that also didn't help. You can see right here that the reason why coin was downgraded by a couple of companies. Like where is it here? I read a report here. Why Coinbase is down? Why Coinbase stock is down? And you can see it's because, they had a significant 39% drop in transaction revenue from the previous quarter, so that's a big miss. So disappointing outlook also on subscription revenue. So despite the euphoria, that destroyed the stock. Big down day. Out of Bitcoin, out of these stocks. MicroStrategy is the next one. Another big drop. Okay, so I don't like holding MicroStrategy as a Bitcoin play anymore. I think you're overpaying for Bitcoin if you're buying MicroStrategy. Okay, you're paying at least 2 times the price, 1.5 to 2 times the price. Better to buy Bitcoin and lever it instead of buying MicroStrategy as a levered play on Bitcoin. Okay, so as you can see, Bitcoin held up much better than MicroStrategy. So you want to be in Bitcoin instead of MicroStrategy. And funny enough, which is another one, Mara, the Bitcoin miner, although it's not at highs, it's not doing very well, it's still performed today better, but it was already getting killed before. So I don't even want to play this. This stock is crap. Okay, if you want to play Bitcoin, just play Bitcoin directly, or a Bitcoin ETF, Bitcoin miner ETF, if you don't know what miner to buy. Okay. So on Bitcoin right now, the conclusion is that I'm waiting, just like I am with the stock market. I'm waiting for it to drop. Maybe the stock market goes at extreme levels. I'm waiting for this to drop even more, consolidate, and then maybe buy, because this stock can get hammered. It can get halved. Okay, so I'm not in right now, and I don't know when I'll be in. I just want to make a note that I'm just waiting and seeing on Bitcoin and Bitcoin-related products. Okay, just like, let's recap. Just like I'm waiting to see what will happen with this market. Okay, let's get rid of this thing here. So again, I'm waiting to see what happens with this market. To recap, expecting it to retest the highs here. We'll look to buy when we get to sentiment a little bit more in the fear range. Okay. Thank our lucky stars that we have some short exposure, and that benefited us. In fact, we made money as the market went down, so that's good. Even though we're net long, that has to be said. We are net long, and we made money on this downturn. So this is how you have to construct a portfolio in such a way that you are insulated mostly from moves. You don't want to be all in one way or all in the other way. Okay, it's you can get lucky, but overall, it's not a very smart way to trade. Okay. You could pull it off. It just takes a lot of skill and knowing when to get out when the market is unfavorable to you. So, not saying that there's just one way to trade. I'm just saying that this way that I've constructed my portfolio over the summer, you can at least sleep at night. Okay, you're not going to hit a home run, but you will hit singles and doubles for a long time. Okay, with the occasional home run. There are some stocks that are doing very well that I have. Even though this market went down, these stocks are up. Anyways, that's neither here nor there. Let's dust ourselves off from this big down move, expecting the market to go a little bit lower. Hopefully retest the highs before going up, or we'll see. We'll see how it goes. But from now on, maintain the position, still bullish. Thank God we have some short exposure, and waiting to add back more bullish long trades. Make a list. Don't forget, make a list of all the stocks that you want to buy when this market maybe flushes out a bit more. And looking forward to next week. Let's see what happens.